Hey everyone, welcome back to Corporate Decoder. Today we're digging into Walmart's latest filing, and let's just say there is a new face joining the captain's crew. This report is all about a key change in leadership and a peek at what Walmart's current financial health looks like. It's always interesting to see who is making the big decisions behind the scenes of such a massive company. So grab your popcorn and let's decode this. And hey, before we dive in, if you like getting the real story behind these corporate filings, make sure you are subscribed. We also have a fantastic community over on Discord, linked in the description below. It is a great spot to talk strategy and get ahead of the curve. Walmart Incorporated has filed a current report on Form 8. This type of filing is usually for major events that shareholders need to know about right away. Think of it as the company's way of sending out an urgent memo. The earliest important event in this report happened on the 8th of January 2026. This is the date we need to keep in mind for everything we discuss from here on out. Now let's look at what Walmart has registered with the stock market. They have their common stock, which is pretty standard for any publicly traded company. This is what most people think of when they hear Walmart, the actual shares you can buy and sell. Then we see some different types of debt, or what they call notes. These are like loans the company has taken out that they promise to pay back by a certain date. For example, they have these notes due in 2026, meaning that is when that particular loan is due to be repaid. It's important to see the different interest rates too, like this 2.550% notes due 2026. Here is another one, 4.875% notes due 2029. This is another debt obligation, but this one is due later, in 2029, and it has a higher interest rate. And look at this, 5.750% notes due 2030. This is another debt offering Walmart has made, with a due date in 2030 and a higher interest rate again. It shows they are actively managing their debt portfolio across different years and interest rates. This part is just the legal housekeeping stuff companies have to do, telling you if this report is also being used for other less common communication rules. For us, it is just a formality. Alright, here is what's really interesting in this filing a big change in leadership. This section deals with people joining or leaving the top ranks of the company, and for Walmart, Therese, a new star joining the board. As of the 8th of January 2026, Walmart's board of directors welcomed a new member, Shisha Mehrotra, who is 46 years old. This might not sound like much, but bringing someone onto the board is a significant decision. It means he'll have a say in the big picture strategy and direction of the entire company. What's even more telling is where they've placed him. Mr. Mehrotra has been appointed to two key committees. One is the Compensation and Management Development Committee, which sounds like he'll have a hand in deciding how top executives are paid. The other is the Technology and E-Commerce Committee. Given how important online sales and technology are to Walmart's future, this tells us they are really looking to strengthen their digital game. Now, let's talk about the compensation. When a new director joins, they usually get paid based on how much of the year they'll be serving. So, Mr. Mehrotra will receive a prorated amount of the pay that's given to directors who are not full-time employees of the company. Specifically, on the 8th of January 2026, he received part of a stock award, valued at $230,000 annually, and a portion of a $115,000 annual cash payment. This means Walmart is showing they value his contribution, not just with cash but also with stock, which aligns his interests with shareholders. They want him to be invested in the company's long-term success. He also has options on how to receive this retainer, which shows flexibility. This just tells us that a formal press release about this appointment is available as an exhibit to this filing. It's essentially an official announcement. This is the section where they list all the supporting documents. For us, the most important part is knowing what is attached. This confirms that the press release about Mr. Mehrotra's appointment is officially part of this report. And this ICE Exhibit 104, which is basically a digital file that makes the report easier for computers and financial tools to read and analyze. Some people call this the company's interactive data. Finally, we have the signature. This is the official sign-off from a Walmart representative, making this report official. It is signed by Gordon Y. Allison, who holds a pretty important title as Senior Vice President, Office of the Corporate Secretary, and Chief Counsel for Finance and Corporate Governance. This title tells you he is a key player in making sure the company follows all the rules. Now, let's put on our investor hats and think about what this all means. The most significant piece of information here is the appointment of Shisha Mehrotra and his placement on the Technology and E-Commerce Committee. Walmart is a giant in the physical retail space, but in today's world, you can't afford to ignore digital. Bringing someone with what we can assume is expertise in tech and online business onto the board signals a clear strategic focus. They are doubling down on their e-commerce efforts, likely looking for new ways to compete with online giants and adapt to changing consumer habits. The fact that has also on the compensation committee is also worth noting. It suggests that the board is thinking about how to attract and retain the talent needed to execute these ambitious tech and e-commerce strategies. They understand that you need the right people in place and need to reward them accordingly. While this filing doesn't go into deep financial numbers in its main body, the details about the notes due in various years give us a snapshot of Walmart's debt management. They have different loans coming due at different times with varying interest rates. This is a common practice for large companies to manage their cash flow and financing costs. The specific rates, like 2.550% on notes due in 2026 and up to 5.750% on notes due in 2030, are indicators of the cost of borrowing and the market's perception of Walmart's creditworthiness at the time. Those notes were issued from a Warren Buffett perspective. We'd want to see if these debt levels are manageable relative to their earnings and cash flow, and if the company is using debt effectively to invest in growth opportunities, which seems to be the case with their focus on technology. Looking at this from a higher level, Walmart is clearly in a phase of adapting and evolving. The risks are obvious. Intense competition, changing consumer preferences, and the ever-present challenge of navigating the global economy. The opportunities, however, are also significant. By investing in technology and bringing in new leadership with relevant expertise, they are positioning themselves to capture a larger share of the digital market and potentially streamline their vast operations even further. So, to wrap it up, Walmart is making a strategic move by bringing in Shisha Meritra. This signals a strong commitment to boosting their technology and e-commerce capabilities. While we don't have detailed financial performance data in this particular report, the leadership change is a clear indicator of their forward-looking strategy. The company appears to be navigating the complexities of the modern retail landscape by focusing on innovation and talent. What is your take on this leadership change? Do you think it is a smart move for Walmart's future? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more decoded corporate insights. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and I'll see you in the next one.